All right, everyone, it is time for one of my favorite topics to talk about. I'm going to do a nice YouTube video and break it down for you. We're talking about covered calls today. Before I go any further, I would be forever grateful if you get a lot of value out of this content to like this video and subscribe. Be sure to tell your friends too. And also, before I forget, I am in my handy dandy garage gym today. I figure with the natural sunlight and all that, it would make things a little bit easier to read. Plus, it just looks cool, and I like the gym. So, anyway, without further ado, we're gonna talk about covered calls. Now, with covered calls, and you can see my cool little illustration. I'm not gonna go into the whole brokerage account and doing all this. We're gonna keep it very basic. I'm not gonna talk about option Greeks and stuff like that here. I might kind of high level it, but we're gonna keep it pretty basic. And so what I want to start with is let's learn the lingo. One call is 100 shares. I cannot stress this enough. You cannot have 82 shares. You cannot have 99 shares. Not one share, not 20. You have to have multiples of 100. Every contract you write represents 100 shares. So if you have 1,000 shares, you can write 10 covered calls on a position that you have. Just remember that multiples of 100 is the key there. Now, covered means that you own the shares, that you have purchased them. If you do a call without them, that is called a naked call. And I'm not going to talk about that here because that is incredibly risky, and you do run the risk, in theory, of having unlimited losses, and we don't want that. Not here to make investing here risky. Let's try to keep the risk down a little bit. This isn't Wall Street bets. And then the option lingo. I'm going to talk about, and I want you to keep in, when I go through an example here, keep in mind of these two terms that will be important: the strike price and the expiration date. And without further ado, let's go into this little example. So you have me, and this is my great artwork here, me, little stick figure, and you have an option buyer. He's the other party. And now the option buyer, you don't know who it could be. It could be an institution. It could be an insurance company. It could be some guy on Wall Street bets buying YOLO out of the money calls. Who knows? I don't know. But anyway, so we have this call contract. And let's say I want to generate some income. So what I do is I decide I have 100 shares of a stock and I want to sell a call on it. Okay, so I want to sell a call. When I sell a call, I collect premium income on that. I will get paid for that option. The option buyer, in exchange, gets a contract which gives him or her the right to buy my shares of stock that I currently own at a certain price. That is called the strike price. By a certain date. That is called the expiration date. So all option contracts expire after a certain time. So what happens is if that strike price is never hit, the option will expire worthless, but I still keep my premium. No matter what, if the strike price if it goes in the money, which means that the current share price of the stock is over the strike price, they can force me to sell my shares to them at that strike price. So that is essentially what a covered call is. And you might be asking, well, how do you know how much money you're going to get? There's a lot of factors that it really depends on. It depends on the volatility of the market. The more volatile the market is, the more money you will make on an option in terms of premiums. The more in the money you write the option, in other words, the lower, if the share price is 100 and you write a call at $90 a share, you're going to make more than if you wrote the call at $110 a share. I don't recommend writing them in the money because I'd rather write them out of the money and have the chance of them expiring worthless, but again, that can influence your price. Now, also too, the type of stock that you buy, like if it's a volatile stock versus a non-volatile stock, volatile ones will always pay a little bit more. So those are some key points to remember with them. But you want to make sure that before you do that, also you'll have to get clearance from your broker. You can just easily request options approval. It's easy to do. And once you do that, you will be good to go. And honestly, you just need the most basic level of options, trading privileges to be able to do covered calls. But just remember, that the way I would do them is write them, like, so let's say Tesla, for example, and I think it's trading right now at $850 a share. Let's say you have 100 shares of Tesla. I would write one, you could write one at $900. And your bet is that it's not going to hit $900. Maybe you write it that it'll expire at the end of the week. Your bet is that it won't hit $900 no matter what. So you write that call, collect that premium, and guess what? If it doesn't hit $900, you keep your Tesla shares and you got some premium income from it. So I like the strategy for generating additional income, but again, it does require a little bit more work. This is not a set it and forget it. You will have to check on your options and kind of keep up with it, but it can generate some nice returns for you. So again, that is covered calls in a nutshell. I will do some more videos on options. I will focus on probably one on the option Greeks, which I didn't really talk about here, but again, I just wanted to kind of be high level on covered calls. I'll post one about option Greeks for people to understand how options are priced, and I will also do one on cash secured puts, and I plan to do one on the wheel strategy, which is becoming one of my favorite strategies on how to trade options. So I'm going to talk about all of that in different videos. But again, hopefully this makes sense. If you have any other questions, feel free to drop them in the comments. You can also follow me on Instagram at mdeep, DEEPE CPA, if you want to see other content that I've been making. But be sure to subscribe, and you will get all the updates as the new options videos drop on YouTube. And you guys all have a fantastic day.